Let's start. Good day and good afternoon. Most of us are in good afternoon actually in Australia. And good day to all of you, who are joined from other different countries. I don't know, Imran, where have you joined from? And welcome to our trader masterclass, 4th of May, 2025. Good afternoon, Dhanuka. How are you? So those of you who are not speaking for now can mute your mic, and if you want to speak, mute, and then you can speak. Obviously, good. Girija has joined. Good afternoon, Girija. How are you?
Good afternoon, Pata. Sorry, my mic was on mute.
You are
Okay.
speaking to a muted microphone. Okay, very good, fantastic. We have just started, uh, and yeah, we
Hi
have a full.
everyone.
Hi, Girija. How are you?
Everything is good, sir. I'm connecting to my phone from right now. In 10 minutes, I'll be able to connect from my system. So please accept me again.
Not
I'm
a
just
problem.
driving. Yeah.
Yeah, anytime and every time.
Thank you.
Not a problem. Thank you very much. We have a big house today. Thank you all for attending to this Trader Master class of NP Financials, which is happening for last 10 years. Same day, same time. What does it mean? It means that first Sunday of each month, all of us, first Sunday of each month, 99% of the time, first Sunday of each month, unless and until the first Sunday is a Father's Day or a Christmas, first Sunday of each month, we are running this Trader Masterclass for last 10 years from 2016. And those of you who have joined new for the first time, uh, welcome. Again, I welcome you all because you're doing it for the first time, and welcome to NP Financials and welcome to NP Financials Trader Masterclass. We'll start with all your questions. Those of you who are again new, I'll again tell you this is a interactive session. 2 hours will be interactive. We'll speak less. You need to speak more, and we'll learn from you. All of us, every one of us, will be learning from each one of us. Like we are doing for last 10 years, every first Sunday of each month. So for those of you, thank you for those of you who have actually already sent me the questions. So I will start with Jack Robinson's question. And Jack Robinson has asked this question, which will be, I'll bring it to you. But before that, I will go through our general financial advice warning. NP Financials Pty Limited advises all service recipients of the following. This information is provided only on general advice basis. This is only educational in nature. Trading securities, derivatives, CFDs, foreign exchange contracts can be risky and is not suitable for all. I'll give you 15 more seconds to go through it and then let me know once you are done.
Agree the same.
Thank you. Thank you very much. Thank you very much. All right. So I'll start. Beautiful color, isn't it? Wonderful. Look at the focus. Look at the focus. So this should be our focus while we are trading. While we are trading, this should be our focus. Yeah. Good afternoon, Yashin. We have just started. Don't worry. Don't worry. You have not missed anything. So we'll start with Jack's question. So we always start with questions. And those of you who cannot read this, I can maximize it a little bit. So Jack is asking, identify the following from daily and weekly charts and observe the effect: support from bullish candlesticks and resistance from bearish candlesticks pattern. Okay, brilliant question, Jack. Thank you for that. We'll take one at a time. So resistance from bearish candlestick and support for. So the context of this question, which is very good, excellent question. Context of this question is, if there is no support and resistance, if there is no support and resistance coming from our favorite yearly, quarterly or monthly, then what to do? That is the context of this question. And I hope everyone have understood the context of this question, and then I will take this question and answer it. Someone wants to join. Barney again. Okay. Good afternoon, Barney. We have just started. We have not missed anything. I'll take the first question. First question is how to identify. First question is how to identify the support and resistance from candlesticks. From candlesticks. So from candlestick, because when we are support, when we are okay, for the time being, I'll take this out, display object. So I have taken everything out. Let me take this swing high, swing low also from here. So let me take that out also. Oh my God, what did I do? I took the price off. Sorry for that. Correct, not a problem. So the question Jack Robinson is asking is how to when and how to draw a candle support and resistance from candlesticks, and why should I draw support and resistance from candlesticks. So to answer that question, okay, before that, let me briefly tell you today four of us will be running this show along with all of you, with your contribution, obviously, as we have started with Jack's contribution, Jack's questions. So to myself for maybe 40-45 minutes, and then we'll request Kim Denson, who is with us from 2012. And Kim is doing fantastic now after so much of some problem he had. He'll be sharing his the issues maybe if he wants. Otherwise, I can only share that we have requested Kim Denson, who is a old timer with us, long-standing friendship with us, and he has doubled his money in recent times. So we'll ask him to speak, and then we'll ask Akshay to share his experience, how he is going in his FTMO after doing the N P Financials intraday trading. We'll request him to speak, and then we'll also request Shreya to speak, because Shreya is doing tremendously well. She is doing a 9 to 5 job. At the same time, she is doing Forex and commodity together. So Forex and commodity together. She is doing both. So tremendous effort from her. So these four of us will be taking you through. So I have taken a question from Jack Robinson. Where and why? First of all, why should I draw support and resistance from candlesticks, and where from? So let me bring it back. So the objects, let me bring it back, the objects. So to answer your question, we should draw from candlestick if there is no support and resistance from yearly, quarterly, or monthly. So let's see, for example, this is a yearly line which is coming from a year, and this is a quarterly line which is coming from a quarter, and this is coming from monthly. So this is coming from monthly, and so on and so forth. And this Fibonacci is coming from monthly. So sometimes, most of the time, they will be very close to the price, like this one, they'll be very close to the price. But sometimes they won't be as close to the price as you think. So in that case, what we need to do, we have our dynamic support and resistance. Support and resistance from candlestick as per our module 3. As per our module 3 unit 1, unit 1 of Trader Foundation. As per our module 3 unit 1 of Trader Foundation. Here, module 3 unit 1 of Trader Foundation. We know how to draw the dynamic support resistance from candlesticks. So how to do it? So we need to identify a bearish candlestick first of all, either at a resistance, or if the resistance is not there, we know how to do it from dynamic Fibonacci. So we can draw the Fibonacci from here to here. We can draw the Fibonacci from here to here, and we are trying to draw the expansion because price has crossed this pillar. So we'll change this to expansion, and we'll see that 127 is very, very close there. 127 is there. 127.2 is there at 6916. So this is an Aussie AUD USD chart. Price has not yet quite gone there. So there is nothing. There is no yearly, there is no quarterly, there is no monthly. So in that, there is no Fibonacci also. In that case, what to do? So we saw a candlestick pattern here at round number 69, and that can also happen on the Fibonacci if I draw the Fibonacci, because the price is here, and then we'll go to the previous swing high. As per NP Financials, we have fixed rule. We have fixed rule to draw the Fibonacci. We'll draw from here to here. We'll draw from here to here. That swing high to this swing low, that swing high to this swing low. And then we have 78.6, not quite there, so but it is very close. So we can say that this is a who can tell me what is this candlestick pattern at resistance? Can you tell me, anyone? What is that small little bearish candlestick pattern at resistance? You can unmute and speak. Okay,
Is it a harami?
very good. That was Ben, isn't it?
Yeah, sure was.
Oh, fantastic, brilliant. That's a harami, small little harami, brilliant at this resistance. So at this resistance. So now we'll delete this Fibonacci, because the harami has appeared at 69 and Fibonacci 78.6. 69 is a whole number. Whole numbers are 6900. Whole numbers are brilliant in trading. So what we will do to answer Jack's question, we need to draw a resistance. We need to draw a resistance at this harami. So the top of the bearish candlestick pattern, will be a resistance, and because we are drawing it a daily, we know the full line is for yearly, the dotted one is for quarterly, dotted 2 for monthly, dotted 3 reserved for weekly, and dotted 4 is for daily. So we'll be doing it on daily and wait for this fellow to be retested. So now for the time being, we are generating, let me move a little bit. We are generating or resistance from the candlestick itself. That was the question Jack has asked. And is this an evening star? Who agrees and who are not agreeing to this? And
agree.
Who said agree? Yeah.
Yep, Dario.
Dario? Ben?
Yeah, I don't agree.
You don't agree? Yeah.
That's okay.
Ben, can you explain? Ben's answer is correct in this case. So can you please explain to Dario, Ben?
The body of the last bearish candle has to take out the 50% level of the last bullish candle.
Fantastic, brilliant. So thank you, Ben. So the body of this red candle has to cross the 50% of the body of the bullish candle. And if we are fantastic in mathematics, what we can do, we can take advantage of a thing called calculator, and in that calculator we can calculate the midpoint of this. How to calculate the midpoint of this? It's very simple. Just add the two open and close. So 6797, only go up to 4 decimal place without the decimal. 6797 is the open price, and the close is 6884 plus 6884, and then divided it by 2. So the midpoint is 6840. 6840. That means for this 0.6840. Let's see the close of this fellow. The close is 6851. 6851 is not below 6840. That is why Ben's answer is correct. Okay, fantastic, very good. All right, so now we'll go ding 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 ding. Price is going down. Very good. And then we'll ding 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 again. So we can draw a support here, because this is also a harami. And you can ask why the price has stopped here. Very simple. When the price printed a harami, first job you need to do, Jack, you don't worry about this Fibonacci, because the Fibonacci is actually in module 3 unit 2 of Trader Foundation. Now you are in module 3 unit 1. So I'm only taking your questions without the Fibonacci. So not concentrating more on Fibonacci. What I'll concentrate more on is the effect of this dynamic resistance line which we have just now drawn from the Harami. Let's see what happens. Bim. What is this? Who can tell me? Last candle in the chart. What is the name of this candle? The candlestick pattern.
Dark cloud cover.
Dark cloud cover. Fantastic. Many of you have responded. Very good. Excellent. Fantastic. Dark cloud cover. Excellent. Dark cloud cover exactly happened there. So that is why, Jack, we need to draw resistance from candlestick pattern itself to see that this can act as a resistance in future, which has happened in front of you. So that I hope that has answered your question, first question, and price need to come down, and it did from that resistance. Now Jack has also talked about a thing called support. So let me do this support thingy. Okay, so this is yearly support, which is very good, not a problem. Yearly is there, so not to worry. And in the yearly is being tested, very good. That is not a problem. What we can do, it has cracked the yearly. And it has a beautiful Harami, same as this fellow, Harami, same as this fellow. So what we'll do here is we'll draw another support line here. We'll draw another support line at this point. We'll draw another support line at this point because there is not much of support here, because it has cracked the yearly. This is the yearly. This is the line from the yearly swing low. This is the line from the yearly swing low, and it has cracked. It has cracked this below. It has cracked the yearly. So for that, what we need to do, we can either draw a support here, or we can see a crack and snapback, whether the crack and snapback is happening. So if the crack and snapback is happening, then the thing, yeah, the crack and snapback is happening. This is the crack. This is the crack, because amateurs do not understand what is the all sellers out bar, because at NP Financials we are extremely strong bar by bar. We are extremely strong for last 12 years or 13 years in Australia. We are regulated by ASIC, and we have our AFSL. We are extremely strong in bar by bar analysis, because market unfolds bar by bar. That is why we need to be very strong at bar by bar. If you are strong in bar by bar, then it is extremely good. You can take advantage of Bollinger Band and whatnot. You can take all those things, Bollinger Band and all those things, but bar by bar is the best thing, because market unfolds bar by bar. So there is no relative divergence here. Also, there is no relative divergence here. And anyone who disagrees or agree with my statement of relative divergence? Is there a relative divergence here? Is there a relative divergence there?
No.
No, very good. 100 out of 100. No, there is no relative divergence there. So I'll take that Bollinger out. And then what I'll do, because I'm seeing so many, all of us are seeing so many things. We are seeing a Harami near the yearly. We are seeing an engulfing near the yearly. So yearly support resistance is terrific, tremendous, very strong, like this fellow. So it has stopped thrice in a yearly. So this is struggling 1, 2, 3 times, and we saw another Harami here. So enough is enough. And then we'll see. We'll draw this line. Jack, now I am answering a question: why to draw and where to draw the support line from the candlestick pattern. So we'll draw that. We'll draw this one here, and wait for any reversal or any break. We don't know. No one knows the right hand side. If anyone says that I know the right hand side, he's bluffing. Run away from him or her. So we need to see whether this fellow at 63. Why I chose this 63? Why I did not choose this 63.57? Because this is a round number. Round numbers are extremely good, because those people who are billionaire traders, and those who have grown in their they are past 70 or 75, and they're going to Chicago Mercantile Exchange PIT, PIT, the only PIT which is surviving now. They don't care. They don't care about much. They only care about the big numbers like 63, like 69. 9 is a fantastic number, and 6 plus 3, 9 is another fantastic number. 9 and 1.618. These are the two numbers which has probably amazed more mathematicians in the worldwide for last hundreds of years. So we also take advantage of that, because we are not also bad in mathematics, but we take advantage of calculator. That's fine. So 6, 9. So this 9 is there. So that is why I drew a number 6, 3, 6 plus 3, 9, and also a whole number. I drew a number. Let's see what happens in the future. Let's see. Ding, 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 ding. Market is going down. Oh my God. Okay. Anyway, so let's see. Ding, 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 ding. Let's see. Ooh, so that is another one. This is kind of engulfing, but not one, because there is a gap here. This gap can be a breakout gap here. There are three types of gap: breakout gaps, continuation gap, and exhaustion gaps. So there is a breakout here, possibly. And then let's see, because the close is here and the open is here. I hope you are understanding. If you do not understand, or if I speak too fast, which I have the habit, if I'm talking about trading, I go fast, but I'm trying to everyone is having challenges, so I'm also working on that. Anyway, so yeah, so if I talk very fast and even struggling to catch up with me, let me know and ask the questions 3 times. How beautiful is this 63 whole number, and the support and the diagonals, and sorry, as the dynamic support from the candlestick harami. We have I don't know what is this, because there is a gap. This is not engulfing, but anyway, this is also hammer, kind of hammer, and indecisions, doji, and all the harami, and not harami, actually engulfing. So this is the way we need to draw the dynamic support resistance from candlestick. Did I answer your first 2 questions, my dear friend Jack?
Yes, that makes sense. Thanks for explaining that more
Right.
and clearing it up.
Very good, excellent. His next question is how to practice the target as per the module 3 unit 1 of our trader foundation course. Previous resistance created by candlestick wicks for long need to see reversals, and previous support created by candlestick wish for short need to see reversals. Equal distance from the break of an wedge and triangle. Okay, you have 4 or 5 questions. So let me show you this one. Let me take this for last 2 first, because because after this I'll come back to this equal distance, wedge, and range mark. Okay, very good. Okay, so those of you who are practicing wedge or pennant or any kind of such things, as per our pattern, as per our pattern trading, what you can do is in an uptrending, this is the a little bit. This is 133 only. Let me increase it to maybe, what is this area? 2022. I'm talking to myself, don't worry. December 2022. I need to go to December 2022. Okay. So that is where I was actually. That is why I'm going now. Before increasing this unit, I was in December 2020. That is what I'm going again. All right. So whenever you see a pattern, that is what his question is. Wedge can be rising wedge, can be falling wedge, can be rising wedge in an uptrend, can be rising wedge in a downtrend, can be falling wedge in an uptrend, falling wedge in a downtrend. Can be pennant, can be triangle, can be broadening wedge. Don't worry, there are many. But anyway, well, that's not difficult. That's not rocket science. Very simple, very simple. So what we need to do, we need to only remember one thing. That when the market is going up or down, it will never goes vertically up. Never. Like this is a tremendous hammer. This is a tremendous hammer, and this is a tremendous this morning star here. Morning star, I don't know what is this, maybe piercing, but this is a tremendous hammer. And anyone who is thinking this is a bearish engulfing, please honestly speak out. Anyone thinks that this is a bearish engulfing? If he or she is thinking bearish engulfing, why? And why not? Tell me. Everyone is muted, talking to mute.
Look, if I would say it's not a bearish engulfing because as we can see, the size of wick is longer than the body.
And the support. It is appearing at a support, yeah?
Yes.
Thank you, Girija. Correct answer. So never ever see a bearish candlestick reversal pattern at a support. Never ever. Always try to see a bearish candlestick pattern at a resistance. Similarly, never ever see a bullish candlestick pattern at a resistance. Always see bullish candlestick pattern at a support. That is why I say no, big no, as Girija said. Thank you, Girija. Now I come back to this Jack's question. What I'll do, so price, as I was telling you, in an uptrend, price never goes up. Oh, in one day, 15%. Never. Maybe some meme coin like Trump coin, maybe, but market never goes vertically up. Neither it comes vertically down. Never. So what it would do? It would do impulsive up, corrective down, impulsive up, corrective down, impulsive up, corrective down. Why this is correction? Because this fellow did not close below this. Why this is correction? Because this fellow did not close below this. So very simple. All right. So in that case, we got an opportunity to make money here. How? Let's see. So we did okay. Let's see. Okay, let it keep that. So we saw one swing low. Let me bring this swing high, swing low, so that it'll be easier for you. We saw a swing high. Those of you, if you do not agree, let me know. This is a swing high. Because this high is higher than this, and this high is higher than this, and this is a swing high because this high is higher than this, and this high is higher than this. Similarly, this is a swing low because this is lower than the 1 and 3. So we'll join this swing high to swing high as an wedge, and this swing low to swing low as an wedge, and wait for price to cross, and wait for price to cross there. Everyone agrees this with me?
Yes, sir.
Yeah.
Fantastic, brilliant, excellent, very good. Good afternoon, Shreya. How are you? We are answering Jack's question, Shreya, on candlesticks, dynamic support resistance, as well as wedge. So this is a wedge, and every one of you have agreed this is a wedge because this is a falling swing high. Swing high is coming down, and swing low is going up. Swing low. This is a triangle or a wedge, whatever name you call it, but this is falling. So falling wedge in an uptrend is what? Who can tell me? Is it continuation or
Continuation.
Very good. That was Dario and Akshay. Fantastic, brilliant. Continuation. Bye. Dario is saying bye, mate, bye. All right. So how to know what is the pole? So we can know the pole in two ways. You can either drop from here to here. That is 217 points, as you can see, 217 points. And then after the break of this line, one peep, just after the break of this one peep, just from here, the pole should be 212 points. Let me draw that 212. Ding. Oh my God, don't do that with me. Okay, I have not seen the right hand side. Okay, fine, that is good. So delete this. And then 217, isn't it? So from here to here, it is 212. My goodness, 212. So I'll go 212. Ding. Yeah. This is my target from this wedge. So I'm answering Jack Robinson question, how to get the target from this break off in wedge. So let's see. Hope and pray.
And where is the stop loss, Partha?
Where is the stop loss? Very good question. Excellent question. If when we are entering here, when we are entering 1 pip above the line, oh good. Look at my drawing. Just 1 pip. Oh good. And we are targeting 212 points. Our stop loss should be from here, from this point to this point, 194. At least 1:1, my dear friend Akshay.
Thank you.
Stop
Thank
loss should be here. Okay, very good, not a problem. So let's target this point and see ding 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 ding, and look at this fellow. This engulfing at this line. How good is that? Engulfing at this line. I hope this also goes up a little bit from here. From here, I hope this also goes up, because this is also getting a support. This is also getting a support on the 12th of December 2022. We are getting a support at this line which we have done, and I hope this will also get a support, because this is from my experience of our combined experience. Okay, let's see. Ding ding ding. Yeah, we got an engulfing. Very good, very good, very good, very good. Let's see. Our stop is here. Our stop is here. Our stop is here. Don't forget. Ding 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 ding. Oh my god, oh my god, oh my god, oh my god. We are losing money. Our stop is intact. Losing money. Here our stop is intact. Because our stop is here. We challenge the market. We are no one to challenge the market, but we challenged ourselves. Our understanding we always challenge. Come and hit me if it is possible. That is what the meaning of putting a stop loss. Tina, good afternoon, Tina. How are you? I hope you are from Australia. That is why I said good afternoon. If you are from any other country, please let us know. All right. So we are still surviving, and let's see. Ding ding ding. Now we are making money a little bit, because we are long from here making money. Ding 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 ding. Go. That's it. We hit our target after such a long time. So that is what Kerry is at. Kerry with us, and she is delivering her brilliance. In our psychology, once in a quarter, she is coming and helping us in this free trader master classes to our traders. And maybe she'll be speaking next month, I believe. That this is what the role of Kerry will come here, how to hang on. And I think Kim will also talk about how to hang on when you are losing money here. $149 or $1,498 with the standard lot, and you have taken a stop loss of $1,941. How not to think about anything but to hang on, and we hanged on, and we got the profit. We entered here, and we got the profit after 33 bars. Who are willing to hang on to this profit, and who are having challenges to hang on to this profit? Honestly, tell us.
I will definitely have a challenge.
Who was that?
Akshay.
Yeah. That is honest answer. Anyone?
Me too.
I would hang on.
Working on it, getting better.
Yeah, Dario. Yeah. That is the honest answer. These are the honest answer, and that contributes a lot to these master classes, because we need to be honest to ourselves when we are trading. So those of us who are, as Dario said, getting there, I love it, getting there. So those of us who are having challenges, then we must work on our challenges. Every one of us are having challenges. Don't worry. Every one of us are having challenges, and we need to be first we need to identify, agree that yes, we have a challenge, and we need to work on that. Is where Kerry comes in, and she is there to help us. Yeah. All right. So all right. So I did I answer your question, my dear friend Jack?
Yes, you did. Yeah, that's good. Thank you.
So I did that equidistance, I did that break, and I did that. Okay, I took this one now. Range market. I love this question. Range market, top and bottom. Oh my God, range market. Very good. Okay. So now I'll take the liberty. I'll change this to bar chart. We can see candles on bar and bars on candles. Don't worry. And range market. Who can forget this brilliant range market as it is as it has happened in recent past? In recent past for 8 months. Who can forget? At least I cannot forget. At least I cannot forget. Okay.
They were giving me headache.
Girija having headache. Oh my God. This is a fellow known as GBP CHF, Sterling Swiss. Sterling Swiss had a tremendous fall. Sterling Swiss has a tremendous fall from here, from this fellow to this fellow, 7.65%, 889 points in 15 days, in 15 bars, in 15 trading days. Yeah. After that brilliant, exceptional fall, because 5% fall in Forex is big enough. 5% fall in Forex is big enough. So this is 7.65% fall. That is too big, my dear friend. So we need to, after this fall, what happens? After this fall, what happens? We need to allow the time to the market to breathe. Time for the market to breathe as per our Fibonacci trading. We have a thing called Fibonacci time. We have a thing called Fibonacci time. In Trader Foundation, we have a module 3 unit 2, which talks about Fibonacci, but this is a 1 month course on candlestick and Fibonacci. So Fibonacci trading talks about Fibonacci time. So as per Fibonacci time, we need to give time. We need to give time to the market because it has fallen 7 point. Oops. Market needs to take breathe in, breathes out, breathe in, breathes out. Okay, fantastic. Let it do whatever it does. So in the meantime, what we saw, it is stopping at our yearly line. So we have a zone of support. We have a zone of support here from 2 yearly, these 2 yearly zone of support. And also there is a resistance here yearly. So here I told you already, yearly lines are tremendous, mind-boggling. Also the monthly lines are not bad. Monthly lines are not bad. Quarterly lines are not bad. But my yearly is exceptional. So what we are seeing here after this, we expect if this is impulsive down, if this is impulsive down, then that was corrective up. Then we expect impulsive down to come here. But it did not. Who think he or she can fight with the market and bring the market up to this point? Honest answer, please. Anyone? Fighting with the market? No one? We are so good. No one is fighting with market. All right. So no one is fighting with the market. Okay, let's then in that case, what we will do? We cannot force the price to come down here and tell us double bottom. No. We cannot do that. At times it will do this. It will do that. So what does it mean? It means that if it is not printing a double bottom, if price is not printing a double bottom, then at least it is telling us I am printing a higher swing low. So higher swing low at 0.2. If you do not see double bottom, don't worry. If you do not see head and shoulder, don't worry. At least you must see a higher low. So this swing low, point number 2, is higher than this one. So higher swing low also is a starting point of a possible reversal or a possible consolidation. So this is also a point here. So this higher swing low. From here, what we saw, we start applying exactly on this bar on 11th of September, rule of 4. So rule of 4 says that touch close above and high taken out. From this we will go long here, and already the yearly line is there. And then again rule of 4 to go long here, again rule of 4 to go long here, and rule of 4 to go short here, rule of 4 to go short here, rule of 4 to go short here. And this will not allow, we will not take this one rule of 4 because this is a big bar, but at least we can definitely take this one for rule of 4, targeting this one. We can definitely take this one rule of 4 to take the, those of you who are new to this rule of 4 and our proprietary rule, don't worry, you can join us anytime, and we'll be explaining, we'll be taking you through from there is no guarantee in trading, but at NP Financials we give many such guarantee. And one such guarantee is, once you are trained by us, you don't have to go to anywhere else to know anything more than what we said. That is our guarantee. That is our guarantee. You don't have to go to anywhere else to know what we have said. That is why we are 100% transparent, and we have 93% customer satisfaction and retention, because of the value which we add, because of the value which we add. So these are the value which we add, there is not millions of rules, there are only handful of rules. No, don't worry, only handful of rules. So we have sorted here, we have sorted here, we have sorted here. This is the courage and the strength we need to have. Bitcoin is doing something. That is the alarm is for. Anyway, so when we go short here on the rule of 4, and we expect at least price to go there, minimum. Same here, same here. Let's see. Ding, 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 ding. Ooh, big one, biggest one. Biggest one after this. Biggest one in last 9 months. So if you do this one, biggest bar. I love big bars. 8 months, 2 days. After 8 months, 2 days, we have a committed bar, willingness bar, eagerness bar, whatever English you use. And very strong bar, very strong, committed, eager, and willing. That means sellers are sellers are now say enough is enough. Now I'll go. Let's see. We are already in the trade here. This minus 30, as you know, as per rule of 4. Doom. For the first time, this fellow with a big bar close below this, close below these 2 lines. We hang on. We hang on. We hang on to the trade. We are as per our rule of 4. We are short here with a stop loss of 111 points. We are running with a profit of 283. Let it run. Let it run. I'm not talking much about this. Let it run. I will allow Kim, who has doubled his money, real money, of course, to speak about this, and also Shreya, how she is hanging on to the trade to make brilliant returns. Okay, ding, ding. Oh God, look at this fellow. Ding, 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 ding. This is all sellers out at a support. Okay, so we got a tremendous run here. 6.29%. That is what is double bottom, my dear friend. So this has fallen 7%. This has fallen 7.65%, and this has fallen 7.75. So this is 7.75 for your record, and this is 7.65. Happy? All right, so this is the way we need to trade our range market. Jack, did I answer your question, mate?
Yes, you did. Thank you for that. Appreciate it.
All right, so previous resistance like candlestick wicks, same thing here. Same thing here. If I change this to a candlestick for a moment, this is a hammer. So if you are short from here, you can cover your position on the hammer. If you are long from here on the hammer, back to back. So this is harami, hammer, and hammer. Let me make it big, a little bit big. So this is harami, this is hammer, this is hammer. So we call it back to back because this is a very bullish morning star, and this is engulfing. Those of you who are thinking that we are only trading candlestick, not at all. The candlestick is there in our module 3 unit 1. We have so many modules and so many units. This is what we are discussing, what the questions Jack is asking only from that module and module 3 unit 1. So for you, Jack, this is a engulfing, this is a hammer, this is a morning star, this is a hammer, this is a harami, this is a hammer, this is a hammer, this is a engulfing and morning star. So those so many things are happening. So you should target your at least to this point, first target, because this is the candlestick support resistance line, or you can target this one, which is the yearly line. So this is how we fix our target. Did I answer your question, Jack?
Yes, thank you. Appreciate it.
Very good. Excellent. Now his last question would be, identify the following placing target from bullish candlestick pattern. Oh, very good question. Placing targets from bearish candlestick pattern. Excellent question. So let me show you that. So if you have, let's take for the bullish and then the bearish. Okay, no problem. Supposing you have taken this, supposing you have taken this hammer, supposing you have taken this hammer, supposing you have taken this hammer or morning star, whatever. Supposing you have taken this morning star, let's do morning star 1, 2, 3, and we see hammer. So supposing you have taken this morning star, your stop loss would be obviously below this, which is 108 points, 110. Let's make it 110. So your target would be minimum in multiple of 110, minimum in the multiple of 110 till this resistance. So our first target is from the candlestick pattern only 110. So this is our first target. Ding 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 110. This is our first target, and second target is from here 110, another ding 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 110. So this is our second target. So if price is going up to first target, we call it a success. If price is not going to a first target, we call it a failure. That is from the bullish candlestick pattern. And let's see, ding ding. Oh, we got our first target. And then we'll go to the second target. Ding 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 ding. If we are lucky, we will get ding 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 ding. We got our second target. So this is how we'll close the first half, one third here, and second 1/3 here. We always do that. We never ever trail our stop loss. That's a losing strategy, trailing stop loss. What we do instead, we take 3 standard lots or 3 mini lots or 3 micro lots, doesn't matter. And in those 3 standard lots, mini lot and micro lot, what we do, we actually close 1/3. That is one standard lot here. With $1,103 profit, another standard lot here, that is $1,110 profit, and the last 1/3 is running, and that last 1/3 can go up to 110. If not, if there is some reversal happening, then we'll close the last 1/3. Are you understanding, each one of you, especially Jack?
Yeah, that makes sense. Yeah, that's good.
Very
Thank
good.
you.
Fantastic. So our third target is 110. Ding, 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 ding. 110. We are not quite there. But this is, look at this fellow. 115 whole number. Oh my God. 1.15000. Is it a whole number?
Yes.
11,500. A big number. And now see what the old man has done. Those of you who have not read the book Reminiscence of a Stock Operator, please read that. It is a true story of the best trader in and around 1900, J.C. Livermore. It is a fantastically written, very witty book, fantastic to read. And I have read that book many times, like Think and Grow Rich. Now it is a movie also. Think and Grow Rich is a book by Napoleon Hill. Only read the original book. And second, two books you should read. One is Think and Grow Rich by Napoleon Hill, and the other one is Reminiscences of a Stock Operator by Edwin. I cannot pronounce his surname. Sorry for that. I think Lefamo or something like that. What is the pronunciation, Shreya?
It's Edwin Lefebvre.
Oh my God. Thank you, Kim. He was so good. Reminiscence. I don't even know the spelling. Reminiscence. What is the spelling of reminiscence of? Let me write something. Reminiscence. CENCE. Reminiscence of stock operator. That's it. Oh, Kim. What a pronunciation, my dear. Can you pronounce again, Kim?
Edwin Lefebvre.
Edwin Lefebvre. Very good, excellent, fantastic. So this is a true story of J.C. Livermore. You must read this book. You must read this book. $12, only $12. eBay. Buy this and start reading this fellow. Don't buy this $25. Only buy this one. By Roger. Who is this Roger? Wait, Roger. No, don't do this. No, don't do this to me. No.
I have added the Amazon link in the chat.
Oh, have you? So nice of you, Shreya. Thank you so very much. So nice, so nice. So please read the original book. Please do not read the. That's a big one. Amazon.com. Thank you, Shreya. And if I click on this, it will take to the original book. $20. How much? My reminiscence of a stock operator. Whatever dollar, I don't mind. These three books must be read by every one of us. Market Wizards is a very good book. This again, I cannot pronounce the surname. Kim, can you pronounce the surname?
Jack Schwager.
Jack Schwager. Very good. Thank you very much, Kim. And Imran is asking, where did you stop loss be on the second, third target? Original position, my dear. Original. We don't trail the stop loss. I think I told you that. But a good question. Sorry, I missed this chat here. Imran from New Zealand. Sorry, had trouble changing from view only to contribution. Okay, not a problem. Anyway, thank you for contribution, Imran. Imran, those of you who have joined for the first time, please share your email address privately to us or at info@npfinancials.com.au. Imran, Brian, George, and Tina Prasad to get our insights into what we are doing now. So three books must be read. One is the market. One is the reminiscence of a stock operator, as per Shreya's link here. No other book but this link. And the second one is Think and Grow Rich by Napoleon Hill. And then third book is Market Wizards is a good book, and Trading in the Zone by Mark Douglas. These four books, Trading in the Zone by Mark Douglas, they have increased the book. My goodness, thanks to inflation. They have increased the book price. These four books must be read. Did I answer all your questions, Jack? Do you have any other question?
No, that's good. Thank you for
Fantastic.
explaining that more. And yeah, so good.
Go, Jack.
I was saying, yeah, thanks for that. It's good.
Very good. And the last question Jack asked is from the bearish. So this is a bearish engulfing. So what we do, we'll take the trade here. This minus 30 points. Our stop loss should be hidden on this quarterly plus 30. So we'll put the stop loss here 146. So our target is 146. Let's see, 146. Ding. 146 is our first target. And we are losing money. Oh my God, we are winning money. So we got 143, 146, and we got another 146. So we got two targets, and we can, in this case, because it's a big bars, we can have the third target also, 146 again. So, and I believe this will be a one third. Yeah, we got one third also. That's good, very good. Now I'll take Anil's question. Anil, are you here? Anil's question. Anil. Okay. Anil is asking, in the meantime, before I take Anil's question, anyone having any questions so far?
Partha, with the last trade, why did you choose 146? Is that because of the distance of the bearish candle?
Yeah, because of the measurement of all the bearish candles. Thank you for that, Jack. Let me again show you. So from the entry point to the stop loss, that is what we do. So this is the entry we did. This is the entry we did on the engulfing. Entry we did on the engulfing, and then 146 is the from here to here. From here to our stop loss is 146. Can you see that?
So wouldn't you go down to the next key level down, like the next support, where you would? Yeah.
Yeah. Go. Complete your sentence.
Well, just yeah, well, just why you wouldn't let it go all the way down to that key level. But I guess yeah, that's just not
Fantastic, brilliant, very good a question. But to answer that question, who can answer Jack question before I can? I'll try, but anyone can. Anyone go. Very simple answer.
You placed your stop loss on that quarterly support line, resistance line.
Yeah. 146 here. Yeah. Complete this statement, Kim.
Oh no, that's what I thought. That's what I thought you were doing.
Yeah. That's what I'm doing. Anyone else want to contribute, please?
so. Yeah, I guess I'm just asking because it's ranging. It's in the middle of a range there. So wouldn't you expect it to sort of go back down to that support above 1.115 or lower?
I 100% agree with you. 100% agree with you, because since we are in this range for last 8 months, since we are in the range for the last 8 months, we can definitely target this one and target this one. Yes, yes. But I am just answering your question, Jack. How in general we will handle the target? How we general will handle? Supposing this line is not there. Supposing this line is not there, then what to do? Let me take this out. Supposing nothing is there. Nothing is there. Then what to do, my dear friend? Then you need to do one by one. So 1/3, 1/3, 1/3. And also my answer to that question is, because the right hand side is unknown, that is why we target 1/3, 1/3, 1/3. Because the right hand side is unknown, we don't know whether price will come at all here, like this one. My dear friend Jack, see, this did not come here. See, we don't know whether price will stop here on the hammer. We don't know whether price will come here. We don't know whether price will go there. That is why we have taken 3 standard loss or 30 standard loss, depending on whether you are taking $1 million account or not. If you're taking $1 million account, then also you can take 30 standard loss. That's not a problem. Yeah, 30 standard loss you can do definitely. And then you can first target 30. If you have taken 3 standard loss, then you close the first one here, second one here, and third one hang on there. If you are lucky, you'll get it. Make sense? Anyone having any doubt here?
I just wanted to add one thing. Look, we are not sure all the time when we are going to come out from the range.
Yeah.
But as we can see, like our range was almost going up to like only from long time 113700.
Yeah.
Then it just gave us the change, as we can see, another resistance 114160.
Yeah.
In this situation, we can only rely on bar by bar.
Yeah.
And another, how we just went for the sell on the R4.
Yeah.
We are able to see there was a humongous change straight
Yeah.
away. So
Yeah.
that's also another sign. We
Yeah.
can just only go for the, as Parthasar is doing, with the short targets. We don't
Yeah.
need to go for the bigger targets. We can just re-enter into the trade when we are sure that yes, there is a change into the market now.
Brilliant answer, Girija. Thank you for that. Yeah, the short and simple answer is, because we don't know the right hand side, that is why we don't want to take risk. First we will close here. First, who knows that it will go and hit our target? Anyone knows that this is a sure short trade? No one. If anyone is saying I'm 100% sure that this will go to down, he or she is lying. I can say maybe some percentage as per our candlestick. As per our candlestick probability chart, in module 3 unit 1 of Trader Foundation, a example worksheet. As per this worksheet, you can see our percentage success for bullish engulfing is 78.95%, bearish engulfing is 68.83. So on that trade, we are 64% confident. We are 64% confident that fellow will hit our target. Everyone understand how to relate probability to our trade? Any question on adding probability to our trade? This is your time, mate. 2 hours. Take advantage of everyone's brain.
And I want to add one more thing into
Go.
that. With that, like, that's where the importance comes of our peaks and troughs and the previous supports and the resistances,
Yeah.
like to make our targets full and fledged, and we can just enjoy much better, perks instead of losing any money.
Exactly correct. Peaks and drops are extremely important. Peaks and drops are very, very, very important as per our proprietary rule. Thank you. So we got our first target here. Close 1/3. Don't be greedy. And we close our second target. Close this 1/3. And don't be greedy. And to close the last 1/3 here. Let's see. Yeah. So that's all done. Jack, did I answer your question?
Yeah,
Now I'll
Arthur,
go.
I understand what you were saying. That was Barney's question about the targets.
Yeah,
Yeah.
that was my question, Partha. But yeah, I understand. Thank you.
But what's R4?
Oh my God, Danuka.
No, it's a rule of 4.
Yes.
Okay, I was just I haven't seen it later like that. Okay.
Danuka is strict. No wonder Danuka has not done sessions for last fortnight, right, Danuka?
No, I know rule of 4, but I don't write R4, so I was just looking at R4.
You must write, mate. You must write. Otherwise, you'll get mixed between whether it is a resistance 4 from pivot or rule of 4.
Yeah, that's what I thought. Yeah.
Oh, this so nice, so nice, so nice. No question is small or big or good or bad. Only the answers can be useless depending on the knowledge of the person who is answering that question. But please ask all the questions. Now I'll take the questions questions of Anil. Anil is asking, I need to understand the market psychology behind the rules of wages. Oh, market psychology. I will not possibly dare. When Kerry Brown, our top psychologist, is here. Okay, let me take, with her permission, let me try to answer the question. I need to understand the market psychology behind the rules of wages. Falling wage in an uptrend in continuation, rising wage in an uptrend in reversal, rising wage in downtrend in continuation, falling wage downtrend reversal. Anyone who wants to answer this question on my behalf?
It's a herd mentality.
It's a hard mentality. Absolutely. Absolutely. True. That is the simplest answer. Absolutely true. Okay. Very good answer. Excellent. Danuka, thank you. Anyone else wants to contribute? No one? All right, not a problem. Go. Who is trying to say something? Go. Someone? What about the newcomers? The newcomers are not answering, not asking any question. Imran, Jogi, Brian, George, Tina, Prasad. Any question from you three? All right.
Arthur,
No, go.
Arthur, can I ask? We've got the resistance at 0.64. Sometimes the resistance acts as a support.
Yeah.
Which is so I get a bit confused by that. Does a resistance become a support? It seems like the resistance lines get broken through, and then the price will bounce actually off the resistance, or it becomes a support.
Yeah, very good. Excellent, Barney. Excellent question. Yeah. The thing which is known as polarity change at NP Financials. How does it work? If a resistance is broken, that becomes support. If a resistance is broken, that becomes support. And if the support is broken, that becomes resistance. That is known as polarity change. Polarity change. Okay. So how to take advantage of the polarity change? POLARITY. So you can take advantage of the polarity change either by drawing a line, either from candlestick like this fellow, This was a resistance here. This was a resistance here. Once broken, high not taken out. So the rule of 4 is invalid here. Rule of 4 is valid here. Rule of 4 is valid there. So we'll go long here on this, and this resistance which is drawn in front of you becomes a support. So this is a polarity change, my dear friend. Resistance becomes support. Like this fellow. This fellow, what is the resistance here? Rule of 4, the high not taken out, but it becomes a support here, it becomes a support here. This is polarity change. Did I answer your question, Barney?
Perfect. Thank you. Yeah.
Anyone who wants to answer and ask any other question before I go to Anil, and then I'll hand it over to Kim, and then Akshay, and then Shreya. All right. So let me answer the question. What is the psychological aspect of this thing, wages? Nothing. Very simple. The psychological aspect of these wages are the belief. Is the belief that market moves in waves, like impulsive, corrective, as you have seen in the zigzag. You can easily draw the zigzag. You can easily draw the zigzag here and see the market psychology. You can easily draw the zigzag and draw the market psychology. Okay. So because we know market moves in impulsive up, corrective down, impulsive up, corrective down, impulsive up, corrective down, impulsive up, corrective down. Why the red one is corrective? Because it is smaller than the blue one. Why the blue one is impulsive? Because it is bigger than the red one. So that is what. So that is the mentality of the psychology behind this. We believe that market moves in impulsive corrective wave, WAVE. There is a brilliant books on wave trading. I'm forgetting the author's name. Wave trading. So wave surfing or something like that. Well, I forgot the name. But if anyone requests us at support@npfinancials.com.au, we can definitely help you. Because the psychology is because we move in waves. Market moves in waves. That is what we wait for the swing high lines which are drawn to be broken. Swing high lines which are drawn to be broken to the upside or to the downside, to the upside or to the downside. Because traders get impatient. As we have seen in our module 2 unit 1 of Trader Foundation. Module 2 unit 1 of Trader Foundation. So when we are forming a base formation, this is a head and shoulder base formation. Whatever it is, don't worry. Cup and saucer, whatever, don't worry. Base formation. And then price do not go vertically up. This is a rule of 4. Vertically price goes up, and then the peaks come down and the troughs goes up, creating a trough. We join this and then enter again here. So when these peaks are coming down, the buyers are getting impatient. To buy, and then they are waiting for this break here. They will break here and then go long here. They will break here and go long here. So this is the psychology which has been explained in module 2 unit 1. Anil, I believe Anil has missed this session. But anyway, that is the answer to that question. Before I go, you have 2 minutes to ask me any question regarding what we discussed already. Please, any question?
Partha, do all your analysis is done on the daily, or is it also done on another time frame?
That's brilliant, Imran. Thank you for asking questions. So Imran is a first timer. He has asked a question. So most of the analysis we start from actually yearly. So we draw our support resistance line on yearly, as you can see. This yearly resistance line, support resistance line, comes to quarterly because of a characteristic property called inferior time frames. They come and sit on a quarterly time frame, and then we draw the quarterly support and resistance line only for last 6 years. Then go to the monthly. This quarterly lines and comes and sits on the monthly. Then we draw the analysis lines on the monthly. Why we are drawing these lines only for 3 years? And then when we are done, then we go to trade either daily or 2 day. We prefer 2 day because we have less of whipsaws and less of opportunity. That is fine. But all our trades, as per our Forex trading, we take our trades on 2 days and 1 day. Our strategy, as per our forex trading model here, is based on 2 days, and which is equally valid for daily. This so very simple strategy. When you see a blue histogram, go long. When you see a red histogram, go short. This is true for we trade only 8 currency pairs. So our analysis, to answer your question, is mainly on the starting from yearly to break it down to daily. Any other question? Did I answer your question, Imran?
Yes, thank you. Very well. Thank you.
Very good, not a problem. Any other question before I go? 4:15. You lost your opportunity. Now, thank you very much for being with me for last 75 minutes. Now I'll request Kim. Anyone new from thanks Imran to ask questions. Imran, you can contact us at info@npfinancials.com.au, or you can go to our contact us page and you can ask any questions there in our contact us page. Same thing is true for Brian George and Tina Prasad. For the last time, I'm asking before I go, Brian and Tina, do you have any questions? If not, thank you very much. I'll request Kim to share his experience. Over to you, Kim. Thank you very much.
Thanks, Partha.
Thank you, Kim.
Hi, everyone. I'm just about to open a page. Can you see that now? Wait, yes. Can you see that now?
Yes, we can see.
Yes, Kim.
Okay, great. So first of all, I'm still feeling my way around. I'm not really here to give anyone trading advice or a strategy or how to go about trading. I've attempted to follow the rules, and in a lot of cases have not been that fastidious about it. So the reason why I actually came to Partha was I had a quintuple bypass. So every single input and output from my heart got clogged, and I was feeling very sluggish. As a result of that, I had a 9-hour heart surgery. And what that meant was that I was actually on a heart-lung bypass machine for pretty much a full working day. And one of the challenges that you face from an operation like that is that for every hour that you are under anesthetic, it takes a certain number of months to actually recover. So 1 hour would be 1.5 months, 2 hours, 3 months, and so forth. And 6 or 7 months later, I was actually let go from my work because I actually wasn't coping mentally. I had no memory. I couldn't remember people's names, details, or anything like that. And the first thing I did was I thought about how I could actually get my mental heuristics back into action so that I could start thinking cohesively, talking without gibberish. And I spoke to Partha and said, look, I just want to start understanding how to trade, but in a formal way, and to follow a process so that I can actually start getting my brain and my mind back together. So that's pretty much been how I came back into trading with Partha. What I'm about to show you is not really how you become a complete trader or how you can actually develop, but perhaps more importantly, the focus has been on trying to get my psychology right and my mentality right within my personality. And I have a unique personality, which when Kerry did her one session a few months ago, resonated with me. I have an ADHD global picture. I see patterns. I don't really know what they are. And I've taken that as a starting point to actually add granular layers fill in the rules and so forth. So you can see on the page there, any trade that you ever take has got a potential regret matrix. So what is that? Well, the answer's there. No matter what you do or what you did, in most of your trades, you could have always done something better. You could have got in sooner, you could have taken more profits, you could have let it run, you could have got out sooner, and so on. But that there for me became the key to how I managed my psychology and my mindset. So with that, I looked at how you could take your trading mindset and your trading awareness. And I had an interesting call with Kerry, and I'm sure she hung up and went, basket case guy, he can be a good client because there's plenty to work on. But I did actually take out a couple of things from my discussion with her. And one of the things is as you learn the rules and you go through the practice tasks and you build the repetition, that builds trading awareness. And for me, trading awareness becomes your psychological capital. And I think psychological capital has more value than your financial capital. Okay. And the reason for that is if you actually understand your psychological aspects, and I'll call them your unconscious mental fractals. Now, we know what fractals are. They're turning points, they're challenges, etc. So inherent in that, every single one of us has a voice in our head, and that's our self-talk. If you understand what your self-talk does and how you can utilize that to give you insights into how you make your decisions. Now, for some of us, we can take 1 minute to make a decision to trade. Some of us can take 3 days. Some of us can take 3 months, and some of us can never make a decision. So if you actually understand how your self-talk runs that unconscious mental fractal, you can then start developing how you can actually take your strategy. So enough of this particular story. I'm just going to show you my chart. It's a very messy chart, and I'll start off with the daily. As you can see, gold has just been going ballistic. Now, I started my first trade around late October, early November last year. And I'd started taking the trade, and I was in the process of putting trades on, and I had done that. And I had a house fire, and I lost everything. And I'm sitting there with this trade running in the ether, and I had just placed it, and I didn't have access to any laptop or anything like that for another 2 weeks. And by the time I came back, I had a couple of, I'll just do this quickly. So you can see at the bottom here on the right-hand corner, I had a couple of drawdowns.
Kim, we cannot see that. We can see your chart.
Okay, so the chart, the point that I was talking to Partha is on the bottom right-hand corner of the chart where it says profit change. I had a couple of drawdown trades there. Can you see that?
Okay, yeah.
So I then actually, I think that was around the time I had the chat with Kerry, and then I looked at the process. So what I do is I actually have undertaken a bit of research on gold, and I decided to trade gold because, in my view, that was the instrument that was going to give me a long-term upside given turmoil, chaos, Ukraine, Middle East, BRICS, tariffs, Kamala Harris, Trump, the whole box and dice, and started looking at what the potential was. Now, I come back to this regret because in a lot of these trades here, I could have got in sooner. I could have got out sooner. I got out too soon. But what I was building was mental capital in terms of resilience to the market and understanding that nothing matters if you actually understand where you sit with a strategy. And I know I've chewed Partha's ear a bit. So essentially, I've got the gold chart. It's the daily here. I have a process whereby I've got a number of Fibonacci's, I've got lines, and I look at support, resistance, the wedges. But what I do is I actually move down to the hourly chart, and I do my trading on this hourly chart here. So you can see where I've taken trades, blue, red, in, out. But you can also see that even though I've got in and out, the market's moved beyond. So then I ask myself, what am I going to do to actually start leveraging myself and maximizing my profit-taking capability? So when I started, I had 2 accounts, a MetaTrader 4 with $5,000 in it. So how do you actually trade on that? So I figured the 1 minute chart would do 2 things for me. It would allow for my quick decision-making process. It'll also allow me to put in fib, put in a number of elements to manage how I could actually look at this. So then I started taking 0.3 of a lot, and then scaling out, booking a third, booking a third, booking a third. And initially I was taking $50 a trade. Once I got to $50, I added that to my capital. Then I lifted it up to 100 as my capital grew. I then got some money, and I put $10,000 in and changed to MetaTrader 5. And I started this account, with $12,000. And over the time that I've been within this trade, you can see here, I've made a profit of $37,000, and I've bumped it up now in the last 3 weeks to $43,000, and I now have a balance of $80,000. And I think Partha wasn't asking me to talk to how you trade, how my strategy is, but more the resilience mentally, that as you work through your own psychological capital, you can actually start taking good money out of that. And, if I look here, there's a trade there. It's the bottom right-hand corner, very bottom line. One trade taken on the 2nd of April and got out on the 29th, $12,000. So that was my initial trading stake, which I then have recouped back in one trade. I'm going to move to the 1 minute chart so you can see where this sits. Oh, actually, there's nothing on this one. I'll leave it on the 1 hour. But you can see I have resistance lines, I have large pennants, I have EMAs, and I use a combination of my Pro Real Time and MetaTrader 5 to actually draw the lines, using the daily, using the hourly as my pattern of where the medium long-term or short long-term pattern is. And then I look at the 1 minute chart to enter, and you can see I basically look at the Bollinger Bands, also look at the candlestick patterns over here, and I take entry and exit positions based on the fluctuation and the market movements. So I guess for anybody that's hesitating or thinks that they've got to have every single piece of information in Partha's course in line, I think there's 2 fundamentals that are pretty good. You need to have a stop. You need to manage your risk at 1%, and you can actually build out slowly and I only spend maybe an hour a day looking at charts at the moment. I'm one of those people that needs to have a good hour and a half nap in the afternoon just to get my energy backup and my process. But I don't look at scalping. I'm not interested in any fluctuations, but I do keep a good eye on what's happening fundamentally from a global political perspective and what the tensions are. So I'm happy to take any questions. Should anyone have any questions? Anybody?
It was great, team. Yeah, Shreya said Shreya like everything. Yeah, that was fantastic. From 42,000 to 80,000. Questions to Kim, please.
Yeah, I have one Q. I think your risk management. I know you won the trade, but in case if it went against you, where would you be? Because you said that you put 12,000, yeah?
Yeah. So, okay, let's have a look here. I'm
Because I
running.
can see like you're not putting stop loss as well, like on
so,
this trade.
Yeah. So what I've got is I've got my stop losses placed around the daily chart and fib levels of 100 or 161. So you can see here on this particular chart here, I've got stop losses set up around here. These are mental stops. They stops that when I look at the charts and I look at what's happening in the marketplace, I've got some time to move on these. So if you have a look here, we've had a good run down. And from these arrows, you can see I'm actually in the market over here. So I've got a running loss on a trade from roughly there down to there. So just over 2% or just under 2%.
Yeah.
I think that you also have to understand the instrument that you're trading. For my 4-hourly trades, for my daily trades, and my Forex pairs, I go exactly by the trading journal that we have, what my stop loss is, what my capital is, what my percentage risk is, what my entry, exit, and stop points are, and I never deviate from that. In my view, given the amount of buying by the BRICS nations of gold, the fact that there's a lot of risk on every single other week, it's not likely that gold's going to go to zero. It's not likely that it's going to drop below 29,000 or 25,000. But there's always a possibility. So you have to work with that. But in this particular instance, my gold strategy is uniquely defined around my personality and my time constraints.
Okay, thanks for that.
Next question to Kim, please.
I'll tell you now, no matter what profit or loss I'm running on a trade, I can go to sleep at 9:30 in the evening, wake up at 8 a.m., and I sleep solidly.
That's
and
great.
I think that is an important thing to understand, that once you start getting your psychology right and you manage your psychological capital properly, there's no fear that you should have around this. And if anyone has any doubts about that, just talk to Kerry about your situation, your personality, your background, the issues you have, and what's holding you back or what's preventing you from taking a trade. Then you can start building up that resilience and trading awareness.
Yeah, just a comment, Kim, to sort of add to that. I definitely feel where you're coming from there. Now that I'm live on FTMO, it's that psychology is very, very different once you're playing with the real money and just trying to find your own risk tolerance. You know, you can go in on a strategy saying that you're going to go 0.3% or 0.5% on any trade, but if your heart starts fluttering when you enter the trade, well, you probably should reduce your lot size or have a look at your strategy a little bit better. But that psychological component and understanding yourself, understanding your lifestyle, for me, I found is very important, and trying to adjust your trading to suit your personality and lifestyle. So yeah, I enjoy hearing your comments, Kim. Thanks.
So Ben, here's an exercise that I did for a period of time. Every single time I looked initially at what I wanted to do from a trade, I started recording what I was thinking. I'm feeling this, the market's doing that. Should I get in? Should I get out? I don't know where to do it. And that started building up. I did that probably for about 2 or 3 weeks. And that started giving me some raw data as to what goes through my mind when I'm being challenged by something called uncertainty, which is what every one of us face because we don't know the right-hand side. I then also started a dream journal to try and capture when I had a dream, when I woke up in the middle of the night, what I was feeling emotionally, and started building out a correlation between my self-talk at the start of a trade and what other areas unconsciously of my emotions or feelings were being projected out. And what that started doing was actually giving me some understanding of what I was being faced with in terms of what I expect from myself, how do I expect things to turn out, how do I seem to feel about myself in certain situations, what are the labels that I have when I'm talking about myself, what fears come up, how do I react to others, how do I react to others' judgment. Before this, my biggest thing was, how am I going to be judged by people on this course in terms of how they see my strategy, the glaring weaknesses, the fails in entry and exit points, the misreading of market timing. And at the end of the day, I just went, you know what? I am who I am. And I know now that I have got much room for improvement. And as I grow with what I do every single day, the only thing that can happen is that I improve. So that's sort of where I come into the process so that I can actually create new emotional contexts that actually drive my decision-making strategy. So if that helps anybody, then, you know, interestingly enough, we've been talking about books. There's a book on actually how to be better in relationships. It's called Getting the Love You Want. And it's by a guy called, I can't even read my handwriting, but Harold Hendricks, The Love You Want. That's about marriage, but it's actually about the deeper psychological components around how you relate to yourself and to the market as another entity. So,
Kim, Purani is asking a question. Can you please help understand to come to this position? What is the time you have spent and when did you start?
I'm sure, Purani. So, I mean, I started the course in July of 2022. I did nothing for a year except tell Partha I needed to trade. I had no money, I had no income, I had no job, I had a small payout, and you know, it took me until November of last year to step into the market and start taking the trade. From November till mid-January, I didn't really do anything other than try and understand how come I had those 4 quick losses in a row, and what I was doing, and I analyzed what my mental state was and so forth. So, yes, it says I've deposited $43,000 into this account, and I've got a profit now of 37, but most of that profit was made when I had my $12,000 from my MetaTrader 5 and $10,000 from my MetaTrader 4, which I transferred across. So I had $20,000 in that, and then I added another 23,000 in mid-March. Well, you can see here, sorry, 30th of January, and again in February. So I don't know if that answers your question, Purani, but I probably spend about an hour a day. I recently finished the 4-hour trading session before doing commodities. And every single day, I try and work my time frame so that I can look at the market at the 4-hour changeover to see how the market's doing, and then build that out into a test journal, and then have a look at how that journal tracks. And I'm in the process now of trying to rebuild a house, manage some health issues. But the point now is that as I actually claw back more time, I can put that in front of the market and really sit down and go through many more of those trading exercises. So Partha would say to me, we got this particular module, you've got 8 pairs, you've got to do these 2 things over a period of time. So you need to create 100 test examples. And I would squeeze out 40. So there's a lot of back work that I've got to go back to and build out and add to it. But really now I'm in a position where I know that I can actually create enough income just from trading and have a look at enough income to generate it. So
Dario is saying great story and good to hear about your recovery and successes. Andrew is saying amazing journey, Kim. You should be extremely proud of yourself. Bonnie is saying thanks for sharing your story. He's asking a question, Kim. Do you trade other commodities?
So Bonnie, yeah, thanks for that. So after I finished the 4-hour and the Forex advanced, I spoke to Partha and we were going to do shares. And I said to him, look, I'm really interested in gold and can I do the commodities? So I think I'm on module 2, unit 2 or something, unit 3. So now I'm starting to look at the commodity pairs, the commodities that we have in our catalog here. And I'm looking at the live cattle, I'm looking at the softs, and so on. So over a period of time, I probably won't be as fastidious about some of the other commodities as I am with gold. But I also think that if we look at where the world is going from an artificial intelligence perspective, the use of AI and the impact that it'll have on our overall life perspective, there's a lot of options there for copper. I think oil is a good one. I've always been interested in oil as well. There's a lot of things happening. And for those of you who aren't aware, essentially at the moment in the US, there's a large proportion of land in the western part of the US that back 250 years ago or 200 years ago when they were trying to expand and they offered land to settlers to go out and trek across America and take a portion of land and build it out. A lot of that land was also marked as federal land, and there's a push now to open some of that land to some of the larger mining companies that manage the REEs, which is the rare earth minerals, because currently China holds the monopoly on the bulk of those metals and I suppose elements that are required for computer chips, etc. And I think that that's going to be an opportunity that will open itself up over the next 4 or 5 years, 3, 4, 5 years.
Fantastic, Krim, brilliant, exceptional, unbelievable. That is fantastic. So what does what do I get? If anyone can tell, but what I get from Kim is you can have your own style, not a problem. You can have your mental stop, not a problem. You can go to intraday 5 minutes chart, 1 minute chart, not a problem. There is no wrong or right doing in trading. What we believe at NP Financials is trading is all about you versus yourself. When you are trading, it is all about you versus yourself. And supposing Kim is trading, Kim versus Kim. I'd like to say that Kim versus Kim, or Partha versus Partha. So trading has to do with only you versus yourself. So one thing he also said, that migrating, or not migrating, actually diversifying from one asset class to another asset class is a good idea. A good idea. That's what Kim did. That's what most of our traders did. Ben did. Now Akshay is doing. Shreya is doing. Thank you so very much. Really appreciate, Kim, for your time and your effort to double your money. And thank you very much. Thanks, Kim Sen. Thanks. Now I'd request Akshay to share your experience doing your prop trading with FTMO. When those of you who are new, we also did provided prop trading from 2019 to 2024, from $25,000 to $1 million. And we have our rules. But due to regulatory changes in Australia, because we are governed by ASIC, we are saying out of stock for the time being. But you can trade them in FTOM and other Mabon, like Shreya would possibly tell something. But I request now to Akshay to share your experience. Akshay, please.
Hi, everyone. Thanks, Partha. I'm just doing this